All right, here we are, 16 minutes past 5 p.m. You're tuned in to Smooth 98.1. Love music, love life. This is the Smooth Drive. My name is Ayokunmi Kekere-Ekun, and of course, Rhea Joy is also in the studio. We are having a great time, but it's that time for us to get into the world of the marketplace. And this evening, we're going to be talking about Nigeria Tier 1 Bank's 2023 earnings review for starters. Of course, we're also going to be jumping into the inflationary numbers. We have new numbers, and we'll also take a sneak peek at what's going on in that realm. Joining us this evening to talk about this is none other than Bala Augie. He is the editor and partner at Money Central Media Limited. Bala, good evening and great to have you on Marketplace.
Good evening. How you doing?
Doing very well, thank you. Hope you're
Very
coping,
well,
as it
thank
were.
you. Okay.
All right. And you can be a part of the marketplace as always by sharing your thoughts with us. Any comments, any questions that you might have on WhatsApp. The number is 0809 981. 0809 981 is the WhatsApp number. You can also join us as we're streaming live on YouTube at Smooth 981 FM Lagos. So those are the ways that you can be a part of the discussion this evening. Now, like I said earlier, we got March inflation figures for Nigeria today. Year on year, Nigeria's inflation rate has increased to 33.2% for the month of March 2024. Now, this is according to the latest data from the National Bureau of Statistics, the NBS. Now, the figure was 31.7% in February 2024. Now, talking about food inflation year on year, it has risen to 40% in March from 37.9% in February. Now, Bala is going to help us to understand or make sense of these numbers. So, Bala, let's start from here. What exactly is the cause of the continuous rise in inflation in Nigeria?
Yeah, basically, inflation has been rising in the past 7 to 8 years, and that's largely due to the deterioration in the currency because what Nigeria is experiencing now is imported inflation because a lot of food that we consume are imported. Even the key raw material components companies use to manufacture products are being imported. So you can see that this trickles down into foods and commodities in the country. So it's basically imported inflation and probably the border closure. Foods are not being able to come in.
Mm,
And that's basically what it is. The continuous deterioration in the exchange rate as Nigeria is an import dependent country.
Hmm.
We import a lot of things. We are not yet self-reliant. So whatever happens to the exchange rate affects food.
mm,
And lately, transportation cost. As soon as the new president removed subsidy on PMS, price of commodities shot up, skyrocketed. So transportation cost is also one of the major reasons inflation is soaring in Nigeria.
okay. Now that we have that out there, I just want to find out really, do these numbers have any impact on the average Nigerian, and what does it even mean for us?
Yeah, like they say that inflation is a monster that steals workers' wages, impoverishes the masses,
Mm,
disrupt asset prices.
mm,
So it's a monster that any central bank governor hates. It affects you and I. Your 100K last year is not as valuable as it is now.
it's not.
That's how it
It's
affects.
At
not.
It's
all.
not. It's not as well. And I don't think we are like the United States or UK where companies are mandated to increase wages in line with rising inflation. So a lot of Nigerians are still on the same salary while inflation is soaring. So it affects you and I. You go to the market today, you
Mhm.
buy a loaf of bread for 500. The following day, you go, it has skyrocketed to 800, on and on. So it affects you and I. It affects everybody. You know.
Okay.
Definitely. I mean, we all know how exactly this is hitting our pockets. We buy things every day. Over the weekend, I had to make a couple of purchases, and at this point, I'm already tired of lamenting and sighing and all that because it just seems like what else is new at this point in time? So it's just a case of buy this thing and move, or if you can't buy it, just keep going. That's just where we are right now, which is kind of
Yeah,
crazy
yeah.
when you actually
Very
think
crazy,
about
very,
it.
very, very, very,
You
very
know,
annoying, very annoying.
very, very annoying. And it has to be annoying also for investors. I mean, will they demand more in terms of returns on their money? What will happen exactly with them?
I mean, it depends on the investors they're talking about. We have the foreign investors and we have the local investors. Foreign investors will definitely look at the real rate on inflation, your real investment, which is the difference between your MPR and the inflation rate. For Nigeria, it's been negative, which is why we've not been able to spur that foreign direct investment as we really want to, which is also why the central bank governor, one of the reasons the central bank governor is hiking interest rates to spur foreign direct investment. So it's like you have your nominal inflation and you have the real inflation. Nominal is without inflation, and why the real is with the inflation rate. So inflation erodes your savings. As
Mm,
an
sure.
it erodes your savings, and foreign investors will not want to bring their money into a country where inflation is skyrocketing, and especially where there's instability in the foreign exchange market.
Mm, okay. All right, since that's the state we see it at the moment, I'm just wondering, yeah. I know that presently we have observed that the central bank has continued to increase rates in order to try to rein in inflation. I just want to ask, is it clearly working, and or do we need to be more patient with the situation we find ourselves in?
Yeah, I think in the rule of thumb is when inflation goes up, the central bank governor hikes interest rate across the globe, like it's happening everywhere.
Okay.
Like I said earlier on, the central bank governor is hiking interest rate to rein in on inflation and also to spur foreign direct investment. Because if investors usually demand a higher yield, that's foreign investors. So the central bank
Mm-hmm.
has to keep hiking the interest rate to rein in investors and spur foreign direct investment, which is needed to shore up the external reserve. One of the reasons the naira has been receiving battering in the past 8 years is because we've not been able to attract foreign direct investment. The government has not been,
Okay.
central bank government was not nimble enough to devalue the currency in 2015 on time, if you agree
Mm.
with me, which is a bitter pill that we must swallow, and we're swallowing it. So I think we have to be patient. What has to go down drastically is food inflation. So when food inflation, like there has been relative stability in the FX market, the naira has appreciated from 1,008 to a dollar to 1,001. That will pretty much help inflation too. It will help manufacturers import raw materials. So when inflation starts to come down, then the central bank governor will start to ease, but it cannot ease at the moment because of skyrocketing inflation and the need to spur foreign direct investments.
Right. Talking about foreign direct investment, I mean, this is something that has been spoken about at length, by the government, by private individuals, by a lot of people actually. And when we talk about foreign direct investment, we know that there are certain things that need to be in place. There are certain changes that need to be made, infrastructure, and so on and so forth, in order to actually attract that foreign direct investment. It's kind of like a domino effect sort of thing. Some things need to work for other things to actually come through. Now, are we seeing enough in terms of those things being put into place to actually attract this foreign direct investment? Because I mean, there has to be a good welcoming environment for these investors to actually come in, right?
Yeah, exactly. That's exactly what the central bank governor is doing. You and I will agree that in the past 8 years, foreign investors have lost confidence in the Nigerian market. Do you agree? If you look at the numbers, and
Mm.
you're not going to wake up one morning and lure them back. It's like a man who sends his wife back in. You don't expect your wife to come in that same day into your house. You have to beg her, you have to pet her, and what have you. So the central bank is creating an enabling environment to show up the confidence of foreign direct investors. One of the things central bank governor is doing one of the things government is doing is to liberalize the foreign exchange market, as we're saying, removing subsidies,
Mm-hmm.
the removal of subsidies, the currency devaluation. These are some of the things that will give foreign investors the confidence that they can rely in the Nigerian market.
All right, good stuff. Now, also, I'm going to piggyback off what you talked about when you were explaining a little earlier on, talking about the naira already appreciating from about 1,800. That was in February to about 1,100 as of last Friday. In fact, I was seeing a report. I don't know how valid it is that says it has even dropped further, but just leaving it at 1,100 as at Friday. Why have prices of goods actually not come down? Or am I asking the wrong question here? Because a lot of people have talked about it. Dollar has come down, but prices are still, high and all that. What do you
Let
think
me
is
give
going
you
on
an
here?
let me give you an example. I want to share a small story with you. I bought a mattress last week. I went to the market to buy mattresses. And I was telling the mattress owner that, but dollar has gone down. And he said, okay, not until we finish selling the ones in our warehouse, we will not go by the new exchange rate because we imported these materials at the old exchange rate. So we're not going to sell at the new exchange rate. We're going to make it loss. So what's happening is that it's a psychological thing that traders will definitely want to sell old goods in their warehouse, the ones that they bought at the old exchange rates. Then they can, when they now start importing at the new exchange rate, we're now seeing the price reduction.
Okay. So it's something that we should expect to happen, even when it comes to food as well. If you're buying the food items, just bear in mind that it is something that they have bought before with the high exchange rate.
Like the stockfish. Stockfish is imported from Norway.
Sure.
Stockfish is imported. So you can't go to the market today and tell the Oporoko woman or the stockfish woman that dollar has come down. She will tell you that, man, at the time they gave her the goods, this was the price that they gave her. So when the importer goes back and start importing at the new exchange rate, they will start seeing a reduction in prices of goods and services.
Okay.
We actually hope so, but Bala, you also know, I'm pretty sure that you probably agree with me on this one. You know how things tend to be in Nigeria. Oh, when the prices go up, for them to come down becomes something of a Herculean task. Is that a possibility that we're looking at that? Because I don't know.
I'm not. I think Nigerians we defy the law of physics. Whatever goes up must come down. Is it that law of physics or something? But I think at this case, I'm optimistic that the price of commodities will come down. And this is going to be a very good one if only governments can look at the agricultural value chain of each commodity. If they can just pay attention to the value chain from bargain, for instance, if it's rice, transportation, and whatever. And what most traders are even complaining about at the moment is the transportation cost.
Okay.
That's another area. That's a big issue because now they're saying that fine, dollar has come down, but as transportation costs come down, it hasn't come down.
It hasn't actually.
It hasn't entirely.
That's another angle to look at.
So if you are bringing in mangoes, from Anambra to Lagos, you know how much it's going to cost with the new transportation cost. So they have to look at that transportation, the transportation value chain. Also look at the agricultural value chain. Then with that, then look at the consumer good firms who had incurred huge FX losses. Government needs to look at their books in such a way, because of course they're going to pass it on to you and I in the form of higher prices. Because if they are making losses, you and I will bear the brunt. So thank you.
So much going on in that sector, so much to actually be done. We'll continue the conversation on the other side of this quickly. That we have still so much to talk about. Banking sector is where we're heading to. Don't go anywhere. The marketplace right here on Smooth 98.1 will continue. Halfway there. right, we're going back in. You're welcome back to the marketplace right here on Smooth 98.1. I love music, I love life. 33 minutes past 5 p.m. My name is Ayokunmi Kekere-Ekun. Joy Urueye is right here in the studio with me as well. And our very special guest in the person of Bala Augie. He is the editor and partner at MoneyCentral Media Limited. And we've been talking about the latest inflationary figures that were released by the NBS, that's the National Bureau of Statistics. We're also going to have to get back into our main conversation, which is why we actually had Bala on this evening. That's talking about Nigeria Tier 1 Banks 2023 earnings review. Okay, so Bala, now uh, talking about these numbers, we have the numbers for Access Bank, for Zenith, UBA, GTCO. Now, First Bank isn't out yet, but how did the banks do generally in 2023?
I think the banks were last year. Banks were the second best performer on the NGX.
Mm.
The industry year to date was at over 100%, and that was partly driven by the removal of the removal of the central bank called the MFLA,
Okay.
the announcement by the new central bank on recapitalization,
Mm.
and expectation of higher dividends, by shareholders. So banks' performance were impressive last year, and their earnings were largely driven by in the debt markets, and significant revaluation gains. So these three um, factors that I've just mentioned were responsible for the impressive performance of banks. They made a lot of money from FX revaluation gains and the elevated yields in the debt market.
Oh, okay. Bearing that in mind, I just want to really ask though, seeing that some of them were able to, make their way in 2023. We noticed, however, that CBN raised their rates, and then returns for treasury bills and bonds also rose as well. And then it had a negative impact on the stock market and banking stocks. My question is, why is this the situation they find themselves in?
I think it's the state of the market generally. Around this period, March, April, the market is usually tepid. There's a time you have a lot of rally. Bank
Oh,
stocks
okay.
are definitely going to rally, but it's just a psychological thing. So a lot of investors have probably bought into the stock late last year, from middle of last year till around December. So there's a time a lot of investors want to hold on to their money, which is why you find a lot of sell-offs, and the market looks pretty much tepid. Because if you have to judge banks have performed impressively, and that's supposed to have a positive impact on their stock
On the
price.
stock price.
But it is not happening because the way investors think is different from you and I. So investors will generally buy into the market probably in the next 3 months or 2 months. So it's a general market conditions.
All right.
In general market condition, do you mean general in terms of the different sectors, not just the banking sector, or just the banking sector generally?
I'm talking about even the market generally. The
Okay,
market has not been
okay.
rallying as it rallied last year, this year. It's not been rallying as much as it rallied last year, this month. So there's always a peak in everything. When we talk about the peak, when something reaches the peak, it slants a little. So we are at the peak. So it will pick up again.
It'll pick up again eventually. Okay, so in that case, bearing that in mind, well, would you recommend the banking sector for stock market investors, or would you tell them to just hold on a bit, don't go in there yet? How exactly would you advise those investors to actually play right now?
Yeah, for investors who like dividends a lot, I think they should buy banking stocks. It's not too late. A lot of these
Okay.
banks have declared dividends, and a lot of these banks have declared dividends, and from the dividend yield, and have an attractive dividend yield, and they made a lot of robust earnings. Investors who like dividend probably wait, as my friend here rightly said, they should now hold on and watch, pay attention to the market and consult their stockbrokers. So you can buy banking stocks based, especially the tier one banks, Access Bank, Zenith Bank, GTB, GTB, UBA, and First Bank. Those five banks, you can buy the stock because of the dividends, basically. So thank you.
Okay, Bala, I'm actually very
They are high
curious.
dividend.
Okay, I'm actually very
Okay.
curious, and I don't know why I haven't ever asked this question before, but this is a forum for everybody to actually learn and gain some more knowledge. When we talk about tier one banks, what exactly makes them to be classified as tier one banks, and they have other tiers of banks?
You have to look at their market capitalization,
Okay.
the market cap. So these five banks make up close to 85% of the total banking sector market capitalization. So you look at the market cap. If you want to check the market share of a company, you look at the market capitalization of that company in relation to the market or the sector. For instance, now, even in terms of earnings, these five banks make up close to 86% of total earnings of the entire banking sector. So they are the giants.
That is
So you agree that there's a wide gap. There's a wide gap between the tier one banks and the tier two banks. So there's a significant gap between them.
That's beyond the gap. That's a chasm of sorts.
But it's good.
I think all will
good
come
to
to an end in the next
now.
few years when.
Oh.
Yeah, I think it will come to an end by in the next 2 years when when the banking sector recapitalization will have, I mean, maybe that's why the central bank wants to recapitalize the banks. Maybe it feels some banks are weak. I'm not saying any bank is weak anyway.
Okay,
Maybe,
now
and the reason.
okay. So now talking about the recapitalization, do you think that the exercise by the CBN will be good for the banking sector?
Oh, definitely. It's definitely good. Recapitalization is a fantastic idea. It's just to solidify the banks. The idea of recapitalization is to ensure that banks have the financial strength to overcome macroeconomic headwinds, so that whenever there is an economic downturn, my deposit is safe, and the banks can meet their obligations as at when due. Is your capital as a bank. If you don't have when there's greater macroeconomic conditions, the central bank is hiking this into capital to protect you and I, to protect Nigerians, to protect our money, so that banks have a very, very solid capital base. You remember what former central bank governor and now governor of Anambra State, Chukwuma Soludo, did in 2005 when he carried out a banking sector implementation, which is why we have banks like UBA, GT Bank, and what have you. So I think it's good for the economy. It protects the interest of depositors, basically.
So that will now make those who are unbanked to actually start banking and going back to trusting the banks again.
Well, it will even give Nigerian banks more room to tap into more asset, to buy more. After the recapitalization of 2005, found out that a lot of Nigerian banks were buying African banks. You are aware?
Yeah.
Right.
So it will give Nigerian banks a low way to buy more foreign banks because they have the capital.
All right.
Investors will have confidence in them.
It's actually interesting, Bala, talking about the previous banking recapitalization that was done by the former CBN governor. So that was 2005, and then the current
now governor
CBN governor is now governor of Anambra State, and the current CBN governor, is delving into that right now. Now, when we talk about banking recapitalization, is there a particular timeline that is set aside, or is it as is necessary that it is actually done?
No, the central bank sets its timeline. I think in this case of this one, I'm not sure. I think it's 2 years.
Okay.
There's a deadline. There has to be a deadline. I think in the case of this one, it's 2 years.
No, I mean the time in between when one recapitalization is done, and then when the next one comes around, because I think last one was 2005, if I'm correct, and we're in
Yeah.
2024 thereabout. So that is a gap of about how many years is that? About eight,
It,
17, 18 years or thereabout. So my question
Oh,
is there usually a fixed time that, oh, if there's a banking recapitalization done this year, in the
you
next
have to
5 years,
wait
the
for
next 10
another
years,
10,
there'll be
12.
another, or is it
no,
as
no, no,
is
it's not.
necessary?
It's as is necessary. It's as is necessary. It depends on what the central bank governor is paying. There's
Mm.
no
Oh,
tenure
okay.
in this case. No tenure. No
Oh,
tenure.
okay. Okay, fantastic.
No
Because
tenure. No
I wasn't
tenure.
exactly sure how that how that was done. And like I said, this is a great avenue to learn. And when you have someone like Bala Augie here to actually give you those answers, you make the best of the opportunity. Thank you so much, Bala, for joining us in this evening to share this knowledge with us and break it all down, give us a better understanding. We've been talking about Nigeria Tier 1 banks 2023 earnings review, what it means for Nigerian banks and for Nigeria as well. And we also delved into the very figures for the month of March 2024. Bala Augie has been our guest. He is the editor and partner at Money Central Media Limited. It's been a pleasure talking to you this evening, Bala.
Thank you. Thank you. You're welcome. You're
All
welcome.
right. Have yourself a
Thank you.
great evening and a great rest of your week.
And you too. And you too. Nice. Thank you.
All right. Thank you for being a part of the marketplace. We do this every Monday at 5:15 p.m. on Smooth 98.1. Meanwhile, stick around, more great music for you as we journey along on the Smooth Drive with Ayokunmi Kekere-Ekun and host Urueye Joy. Stay with us.